So I'm here at the Silver Summit 2014 in beautiful Spokane, Washington at the Davenport Hotel. And here is a very interesting guest that we have with us, Mr. Jeff Desjardins of thevisualcapitalist.com. If you see all those infographics that you've seen all over the net, Visual Capitalist is the one that's behind those ideas and those graphics. So Jeff, thanks for being on our segment today.
Yeah, thanks so much. Thanks for having us.
Excellent. So you've done several of these infographics. There's multiple uses. You've done several for the mining sector as well. One that really peeked out to me was the silver infographic that you did.
Right.
And it was very interesting, just talking about the different uses that you had, or for what silver is, being at the Sauder Summit. So, what are some things that kind of stuck out to you from that infographic that you did?
Well, I think the most important thing for people to remember about silver is that it's sort of unique and similar to platinum in the sense that there's a big chunk of industrial demand. Silver is actually used for over 10,000 different industrial purposes. So they range from all kinds of different things like being in solar cells, being in even used in photography back in the day. That's a huge use for silver.
Well, David Morgan mentioned in part of his presentation this morning on photovoltaic uses, right? So that was pretty interesting. But
yeah, exactly. And then silver is also really interesting because it's antibacterial. So there's a whole plethora of uses that people are using it as topical ointment. People used to even use silver back in the day. Alexander the Great. All of these guys used to actually keep liquids in silver canisters because the antibacterial properties of the silver prevented things like milk from spoiling and things like that. So silver is one of the most interesting metals for sure to look at.
Interesting. So let's step away then from silver and let's talk about you did a very powerful, you've done several powerful infographics on the junior exploration mining sector. And you've done several. You've done one on Nevada exploration companies. You found a very interesting pattern there. Can you talk a bit about that, and then talk about the infographics that you did regarding what to look for in mining companies? Because you did some on G&As and several things like that. So
Yeah, so with a lot of that content, we're putting it together using a database that we have through one of our other companies, which is stickerscores.com, which is what we're exhibiting here at the show.
Right.
And so through that data, because we're looking at hundreds and hundreds of junior companies, we're able to pull interesting things out of that data, which the average investor, the average viewer of any of our sites can look at and come to some conclusions about what's going on in the space. So in terms of some of the information that we've been covering recently on the junior mining space and junior mining companies, I guess probably one of the most interesting things is the fact that we're starting to see a really sharp divide in the industry between the companies that have funding, that have money, that have a solid backing with a great project, and the companies that aren't in that situation.
Right.
So there used to be a lot of middle companies, or like the middle class, I guess you could say. And one thing that we start to see through the data is that the really solid companies, they keep on getting money, they keep on getting the funding, they keep on exploring and getting new results and moving their projects forward. And the middle guys used to be able to sort of keep up with that stuff now, but either they've gone to that group in the top tier, or they've not been able to raise money at all.
Right.
And so as a result, it's just a very interesting environment because you have hundreds of these companies moving towards sort of like this capitulation. And when you look at the data, it's just it's kind of funny. You have, as an example, like looking at, I think you're looking at Ontario Exploration. There's 3 companies that had cash balances of their average cash balance between the 3 companies is around $2 or $3 million. But then all of the other companies, I think there's 19 other companies that don't yet have a 43-101 in Ontario, and their average cash position was like, there you go, 81.8% of companies had under 400K cash. That was something that has changed, like over the last 6 months, that number has changed significantly because 6 months ago, only about 65% of companies had under that amount of cash. So that means 3 or 4 companies have moved down below that threshold, which is a scary threshold for investors because companies aren't really able to put money in the ground there. They're not really able to do work. because doing a drill program, as you know, is expensive.
Right,
It's a big
absolutely.
bill,
And another part of that infographic, before we go into other other variables that you look for in a mining company, was the uses of that cash.
Yes,
you
exactly.
made a very good point in terms of you can explain more, but just the uses of the cash of the junior mining companies. There's a very interesting infographic, but you can speak on that.
Yeah, for sure. So not only looking at the cash positions, I mean that's a place to start for sure.
Right.
But the real question is, how fast are companies spending that cash, and what are they spending it on? And generally speaking, as an investor, what you're looking for is you're looking for a company that's going to be creating opportunities such that the share price can appreciate. So to do that, there has to be some sort of news, some sort of an event that happens, and obviously with the mining company, it's going to be something related to exploration, or developing a resource, or building up that resource, the economics of the resource. And if you're not spending money in the ground, you're not going to be able to get any of that news. So you have to be drilling, you have to be doing your and it's something that someone like Rick Rule has talked about for a long time. But back in 2010 or so, around that time, 2011, people would be spending 80% of their money on G&A.
Right.
So G&A is the general administrative expenses when you're looking at a company's financials. That's money that's going towards things that are not going in the ground, so not direct work.
Right.
You want to see your money that you've put into that company going towards a project and potentially creating shareholder value.
Right.
And the lower that G&A percentage is, that means the more money is potentially going towards the creation of that shareholder value.
Right.
And you got to pay management anyways. You got to pay your geologists. You got to pay these people. So some money does have to go to G&A, but just not excessive amounts where you're not putting any money in the ground.
Right. Well, money that's not creating value in the ground to progress the company's prospects for the progress, right?
Exactly.
So that's what really matters at the end of the day.
Yep.
So just to go back, step back on the infographic of the junior exploration companies. What are some other factors then that you're looking at as far as the G&A, the cash burn rate, based on the infographics that you've already done?
Right. So
also,
we go into much more depth. We look at institutional and fund ownership, management common share ownership. And we're looking at all kinds of other things. How fast are they spending their money? So burn rates, both on a quarterly and on an annual basis. So we collected data around all these different things. But I guess one area that's interesting for an investor to look at, and which is a very important variable that we use for tickerscores.com on assessing a management team, is how much skin that they have in the game, which is their common share ownership. And we try and stay away from options and warrants and things like that, because right now those are, they didn't cost anything. They didn't put any money into it, right? This is something that the management team gets. So it's not necessarily skin in the game until it's actually something that they've put money into directly.
So what did you notice about that particular infographic or that portion amongst the companies? What was there any pattern or last year or?
Yeah, well, I mean, it was just interesting to look at the differences that there were between companies. We saw a lot of companies that, when it came to having this sort of common share, I think out of over 400 companies, I think 132 had less than 5% ownership in their company throughout their entire management team.
Interesting.
And then, the average that we found was 11.9%. So, not to say that that's a be-all, end-all kind of thing, but you should see some sort of interest that management has in the company. Otherwise, they're getting a paycheck and things are good for them, but they're not incentivized to create value for everyone. Right?
Absolutely.
So 11.9 is the average that we found there, and I think that's pretty consistent with other studies as well. And some companies, some of the standouts have a higher percentage of that as well, which is nice to see. Obviously, as a company moves forward on the exploration timeline and you get into development and production and stuff, you have to be able to, you're generally adding more shares to the float and bringing in other institutional investors into it. So that starts to decrease as you go the further in. But we see a lot of producers have a percentage more like 3% or 5% management ownership. But that's a very early stage exploration company. You want to have a really high ownership there.
Thanks, Jeff, for being on the segment here. If you want to reach Jeff, you can go to visualcapitalist.com and you can find various educational infographics. And if you do want to increase your knowledge and education and take it a step further, go to ticketscores.com and you can definitely increase your sophistication in selecting the right stocks. So thanks, Jeff.
Great.
Appreciate
Thanks so
it.
much.
All right.